Schlumberger announced first quarter 2024 earnings on April 19th. Year-over-year results were positive, continuing to grow, but quarter-over-quarter results were lower. Depending which media you consume, earnings beat consensus expecting 75 cents or 69 cents per share. We'll first look at the quarterly revenue breakdown, then revenue by segment and by geography. We'll examine the fundamentals and valuations, present Schlumberger's guidance, and then provide our rating at the end. Revenue for the quarter was 8.7 billion. That was down 3% quarter over quarter, but up 12.5% year over year. Gross margins were slightly softer, down 2.27% quarter over quarter to 19.5%, though improved by 4% year over year. Operating income was 1.4 billion, down 5.6% quarter over quarter, but up 17% year over year, representing about 16% of revenue. Finally, income reported was over $1 billion, down 4% quarter over quarter, but up 14.4% year over year, or about 12.3% of total revenue. As we mentioned earlier, the quarterly growth was all lower, but the year over year growth was all higher. Looking at our historical quarterly net revenue, we can see that has been definitely uptrending. The latest quarter was softer at 8.7 billion, but we can also see here in Q1 2023 that quarter was softer as well with respect to Q4 2022, indicating a seasonal or cyclical downturn. Net revenue has been growing at a 4.3% compound quarterly growth rate, gross profits by 6.7%, operating profits up 7.7%, and net income growing at 8.6% since Q1 2022. Good, steady growth. Turning to revenue by segment, we can see well construction in yellow has been Schlumberger's biggest revenue earner, ending Q1 2024 slightly lower to 3.4 billion. That's a compound quarterly growth rate of nearly 4%. Production systems in green has been their largest growing business line, expanding by 6.5% in the last 9 quarters, earning 2.8 billion. Reservoir performance in red expanded at a 4% clip, finishing the quarter at 1.7 billion. And digital integration, shown in blue, Schlumberger's smallest business line, reporting 950 million, growing only by 1.2%. Revenue by geography has the Middle East and Asia in green as the largest market, reporting just over 3 billion for Q1 2024. It has been growing by 4.8% in the last 9 quarters. Europe and Africa in yellow is their second largest geography by revenue, reporting 2.3 billion, growing by 5.8%. Latin America in red grew by 3.6% since Q1 2022, earning nearly 1.7 billion. And North America, Schlumberger's smallest geography, here in blue, yielded 1.6 billion and has been expanding by 2.5%. Let's look at some ratios. Shares outstanding grew by 1 million, and that's on a fully diluted basis. So all of our per share earning numbers are based on that. Earnings per share came in at 74 cents, down by 4% quarter over quarter, up 14% year over year. Sales per share were lower quarter over quarter by 3% and up 12.5% annually. Cash was $1.93 per share, both slightly lower in the quarter and year basis. Book value did increase to $14.33, improving quarterly and annually. Schlumberger's PE is 16.7. That's annualized using the current earnings of 74 cents. This compares to the S&P 500 of 27.7. The PE growth is above 1 at 1.17, indicating that Schlumberger could be overvalued. Earnings are lagging. Turning to leverage ratios, debt ratio is only 0.22, debt to equity is 0.5, and interest coverage is 12 times. Liquidity ratios look good. Current ratio 1.37, quick ratio 0.9, and cash 0.22.2. No short-term liquidity problems. Looking at the return on ratios, we can see return on assets of 9% was slightly better, return on equity of 20.6%, return on capital employed just 4%, and return on invested capital at 3.25%. The cash flows show Schlumberger is in a good position with respect to cash. Operating cash flow was 327 million for the quarter. Investing outflows were just 151 million. Financing outflows were 267 million, with free cash flow to the firm at 2.8 billion year over year, improved by 86%. Further reinforcing that Schlumberger has good liquidity. Dividend paid was 25 cents. That's yielding 2% on an annual basis, growing at 43.3%. And that is a payout ratio of 33%. They recently announced an increase in the dividend to 27.5 cents for the next quarter. A good dividend demonstrating future confidence in the business by management. Enterprise value for Schlumberger is 68.4 billion. That's only 2 times revenue, 10 times EBITDA, and 6 times free cash flow, indicating that perhaps Schlumberger is undervalued. Turning to guidance, the CEO indicated on their earnings call that they expected low single-digit sequential growth. EBITDA is expected to be in the mid-teen range. Based on the limited guidance information, we didn't include a net income or EPS for Q2 2024. Our key takeaways on the pro side show strong valuations in terms of PE and enterprise ratios. Schlumberger has good cash flow. They are growing the dividend. We also like the acquisition of ChampionX, which should see annual revenue grow by $4 billion. The all-share purchase will have a negative impact on per-share earnings, however. On the con side, revenue has been consistently growing but slowing. Oil prices have improved in the last 4 or 5 months, but the firm hasn't been able to capitalize on that. We're giving Schlumberger a cautious buy rating. Like and subscribe.